The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Good morning, Joe Ingram. Glad to see you tuning in with us. Good friend of mine, good friend of the show. So before the break, we're chatting a little bit about what's going on in the mortgage world and what's going on in the markets right now. So let's take a look every day at this time. OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. Clean sweep yesterday. Every one of the numbers are in the green. Now, when we look at these numbers, we much prefer golf. Like we want the red numbers, not the green numbers. 30-year conforming up 6.928, 30-year jumbo up 7.142, 30-year FHA up 6.828, 30-year USDA up 6.87, and the best loan on the market, thankfully it was up the smallest, I think, of all the numbers. The 30-year VA loan, got to earn this one, 6.646. Why? Well, let's take a look and see what's going on today. Those are all the numbers from yesterday. Remember, again, that OBMMI does not tell us about the APR. They don't tell us points paid or points received. Today, we're seeing the 10-year Treasury is up 5 basis points. The mortgage-backed securities are down 27 basis points. Hard to say this, but at 27 basis points down, that is an improvement from the lows of the day. We were down significantly more than that earlier in the session. We were at 98.24, so we were down about 35 basis points more than that earlier in the session. Why is all of this happening? What's driving the markets? What's driving the numbers? Well, obviously, I told you earlier about the downgrade from Fitch. They're a bond rating service. So when we keep going into debt the way we are in the federal level, the national debt, sorry, Mr. President, yes, it's growing dramatically. So as that continues to happen, more bonds have to be issued to pay that debt because we keep raising taxes, which lowers the amount of revenue going into the government. More you increase the taxes, more you increase the regulation, which slows down the economy, the lower the amount of revenue that comes in. So, yeah, you can get fast nickels or slow dimes. The president and the administration prefers going with the slow dimes, and that's what's happening right now. So we also got ADP. They came out with their private sector employment numbers for July, showing that there were 324,000 jobs created, higher than the roughly 190,000 expected. There was a negative revision to the monster 497,000 in June, which was lowered by 42,000 to 455,000. Still a very large number. The BLS said there were only 149,000 private sector jobs gains in June, or 1/3 of the gains. So there's clearly a big disconnect between ADP and BLS. Goods sector added 21,000 jobs, led by natural resources and mining, but construction was pretty flat, and manufacturing lost 36,000 jobs, has been showing job losses for several months. Service sector added 303,000 jobs, led by leisure and hospitality, which added 201,000 after adding 232,000 in June. Compared with only 21,000 jobs in that area in the BLS report. Who's right? Also, for the second month in a row, ADP said leisure and hospitality drove job gains with a rise of 201,000, following 232 in June. In comparison, BLS said there was 21,000. ADP also reported that annual pay for job stayers increased by 6.2% year over year, down from 6.4% in the previous report. Job changers saw an average increase of 10.2%, down from 11.2%. While these figures are still high, they've been moderating and showing lower wage pressure inflation. Wages have moderated for 13 months in a row and have cooled considerably from their levels of 8% on stayers and 16% on switchers last year. Bottom line, big disconnect. Why do we have so many people getting new jobs, yet we're not getting an increase in wages as big? Why is the wage increase is not going up? It shouldn't happen that way. Job openings and labor transition, that's the JOLTS report, fell a touch from May to 959.58 million from 9.62 million in the previous report, which is the lowest since April 2021. This number is likely overstated. Still, with work from anywhere and multiple job listings for one job in different states, hirings fell by a sharp 326,000, and the hiring rate fell to 3.8% from 4%, and that matches the lowest since January 2018, not including COVID. Job openings for leisure and hospitality fell by 81,000 to 1.22 million, the least since March 2021. There is a clear trend of less openings, which should eventually lead to weaker job creations. ISM Manufacturing Report. July, 46.4 versus 46 in June, or 0.5 points below expectations, which is the weakest level since mid-2009, again, not including COVID. Employment notably fell 3.7 points to 44.4, lowest since May. Slowdown in hiring with attrition, freezes, and layoffs actively in place, as noted by many panelists that we've been listening to. Consistent with the drop in manufacturing jobs in the ADP report, still showing weakness in the economy in a lot of areas. A lot of folks are not believing that, but it is what it is, and there's no way you can detract from that. The numbers will eventually flow through all of these unless the government changes the benchmarks again. But the government we're still going to start seeing some of these things. They're going to still happen. And the issue is, when are we going to see the numbers coming through in a bigger way? Again, yesterday we saw CVS lay off 5,000 people. Yellow, the trucking company, laid off 30,000 people. Big business is laying off people. And according to ADP, it's the small business sector, which is the area where we're actually seeing some of this job growth. So we're watching all of these numbers for you. Let's see what else we had in that ADP report. I know there was a couple other things in there. And again, the small businesses, they're the ones with under 50 employees. They're still holding on. They're still showing us a little bit of job numbers. But again, you got to wonder, why is there such a big disparity between leisure and hospitality of 232,000 jobs gained on the ADP report and 21 from the BLS report? You might have to look at how the numbers are derived. BLS, which comes out on Friday, the household survey, which comes out on Friday, those are both modeled. They're not done from as much real data. ADP does, and they also use seasonal adjustments. So, and ADP actually uses their payroll of 25 million people. Small businesses, that's with less than 50 people. Again, 327,000 jobs gained. Businesses with over 500 people, 67,000 jobs lost. Now, maybe that when you use the modeling from the BLS report and from the household survey, maybe they just don't track the numbers as well as ADP would for small businesses. How are they getting their data into the small business area? That's what we look at to check on where those numbers are coming from. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Again, make sure if you want updated data every morning, we send out a report, rsrmarketminute.com. rsrmarketminute.com. We send that out every morning. Depends on how late the data comes out as to when we get the report out. We try to get it out by 7 a.m. California time. Doesn't always happen that way, but we do try and put that out. If you want to get it first thing, emails go out first, rsrmarketminute.com. We do post that on our social channels a little later in the morning. Again, the emails go out first.